Hello everyone, myself Navita Suresh Madi and my presentation topic name is Mutual Fund. Mutual Fund. A mutual fund is a common pool of money into which investor place their contributions that are to be invested in a different type of securities in accordance with the stated objective. An equity fund would buy equity assets, ordinary shares, preferentials, warranty, etc. A bond fund will buy debt instruments such as a debenture, bonds, or government securities, money market securities. A balance fund will have mix of equity assets and debt instruments. Mutual fund shareholder or a unit holder is a part of owner of the fund assets. Myths about mutual fund. Mutual fund invest only in a shares. Mutual funds are prone to very high risks, actively traded. Mutual funds are very new in the financial market. Mutual funds are not. Facts about mutual funds. Equity instruments like shares are only a part of the securities held by mutual fund. Mutual fund also invest in a debt securities which are relatively much safer. Mutual funds are there in India since 1964. Mutual funds market has evolved in USA and is there for the last 60 years. Mutual funds are the best solution for people who want to manage risks and get good returns. Investor pool their money together. Fund manager choose securities, invest in securities, guarantees, return, pass down to investor. Types of mutual fund. Open-ended funds. Open-ended funds typically do not limit the number of shares they can be offered and are bought and sold on demand. When an investor purchases shares in an open-end fund, the fund issues those shares and when someone sells shares, they are bought back by the fund. Closed-ended funds. Closed-end funds are a type of investment company whose shares are traded in the open market like a stock or ETF. Capital does not flow into or out of the funds when shareholders buy or sell shares. Interval fund. An interval fund is a type of investment company that periodically offers to repurchase its shares from shareholders. That is the fund periodically offered to buy back a stated portion of its shares from shareholders. Advantages of mutual fund. Portfolio diversification. It enables you to hold a diversified investment portfolio even with a small amount of investment like Rs 2000. Professional management. The investment management skill along with the needed research into available investment options ensure a much better return as compared to what an investor can manage on his own. Reduction diversification of risk. The potential losses are also shared with other investors. Reduction of transaction cost. The investor has the benefit of economic of scale. The funds pay lesser cost because of larger volumes and it is passed on to the investors. By choice to suit risk return profile, investor can choose the function based on their risk tolerance and expected returns. Advantages of mutual fund. Liquidity. Investor may be unable to sell shares directly, easily and quickly when they invest in mutual fund. They can cash their investment anytime by selling the units to the funds if it is open-ended and get the instinctive value. Convenience and flexibility. Investor can easily transfer their holding from one scheme to other. Get updated market information and so on. Transparency. Fund gives a regular information to its investors on the value of the investment. In addition to disclosure of portfolio held by their scheme, the proportion invested in each class of asset and the fund manager investment strategy and outcome. Disadvantages of mutual fund. No control over cost. The investor pays investment management fees as long as he remains. with the fund even while the value of his investment are in decline. He also pays for fund distribution charges which he would not incur in direct investments. No tailor-made portfolios. They very have the very high net worth individuals or large corporate investor may find this is to be constrained as they will not be able to build their own portfolio of shares, bonds and other securities. Managing a portfolio of funds, availability of large number of can actually mean too much choice for the investor. So he may aggregate, need advice on how to select a fund achieve objective. Challenges and opportunities. Assessing the needs of the investor, expanding the customer base, responding to investor needs, studying the microenvironment, choosing the distribution network, finalizing the strategies for a publicity and advertisement, getting a feedback about sale, creating a new markets for a mutual fund, creating positive image about the fund, spreading awareness about mutual fund. Thank you.